Welcome to The Reasoning, a podcast created for the purpose of shining a light on career, personal, and community growth and development. I'm your host, Rich Wright. Today we're talking to J. Thomas Sadler, founder of IBIS Compliance and Financial Services. He's going to be telling us about his journey to becoming a financial services professional. Let's listen in. Financial services profession?
Yeah, I would. And in many aspects. So, just to kind of give you a narrative of my path of kind of how it started out. I started out as a stockbroker trainee in '96.
Yeah,
And
that's the part that I remember.
Yeah.
I remember, and I would like you to tell how you got to that, because you were trying to help a lot of people out.
Yeah.
That part I remember.
Yeah.
But how did you even, one of the things I really wanted to ask is, how did you even get into, how did you stumble onto that?
Yeah.
If it is a stumble.
No, it was.
Yeah.
It was the universe, it was the creator, it's whatever you want to call it, divine providence. So, I don't know how far back you want me to roll, but I would say I think it's very important that I was a teenage father
Mm-hmm.
with 3 children by 19,
Mm.
right? And I always had a vision of building a family. So I can't say it was a planned family, but I always had a vision of building a family.
Mm.
I was raised by my great grandmother, and that's it. So I never had that nuclear family structure. So that was always a vision of mine. But once you have children, you want to provide for them and you want to give them the best. And I was working different jobs. I was working at UPS as a per diem and and commuting back and forth to Nassau Community. And then I was laying carpet. I was working with Ronnie Knowles.
Okay.
Laying carpet. And then also I was working in the barber shop.
Okay.
At the Taste.
Okay. Oh, wow.
A friend.
What was you doing at the Taste? Sorry to break, but that that caught me. What was you doing there?
I was a barber.
Oh, okay. I remember that.
Yeah, I was
Okay.
a barber. I was cutting hair before I hurt.
Oh, really?
Yeah.
Okay.
If you remember when we was playing football, a lot of times before games, people would come to my house, especially our junior year, to get their haircuts. And then probably like the following year, Herc started cutting.
Right.
But the fast forward, a friend of mine, Keith Brister, he's playing flag football with us, and then he brings a friend.
Mm.
And that friend, we develop a relationship, and he's in the stockbroker trainee program.
Right.
And
This is like what year? This is long. This is after high school.
Yeah, it's in like 95. He was in a stockbroker training program, and he asked me if I was interested. And again, we're from Long Island, so we don't know much about that arena,
Right.
but we know that there's money on Wall Street, right?
Right.
So I'm like, yeah, put me on, what I need to do. He's like, you got to study. And I'm like, well, give me the material now. I'm a reader. I don't have a problem with that. So lo and behold, he was able to eventually get me into the stockbroker trainee program. And in hindsight, after they came out with the movie Boiler Room, it was exactly that.
Mm.
It was exactly that. It's a company called European Community Capital.
Nassau. Okay.
Mm-hmm.
Yeah. And that was a series. You got the Series 7.
Series 7. Yeah.
It tripped me out because I was looking at your bio, and I'm like, hold on, you had like 1,000 series over there.
Yeah.
I never knew that there's like, what are those? What is a Series 7? First of all,
okay, so a Series 7 is a general securities representative. So it allows you to pretty much sell the broadest aspects of the market. So I can sell stocks, I can sell bonds, I can sell options, I can do underwriting, I can do municipal business, it's an intense exam. It was 6 hours, but it covers like the gambit.
Mm.
Um, Funny enough, they've diluted that exam because it was so challenging. They were losing people into it, so they broke it up. So
It's because people are deluded now.
yeah, yeah, facts, facts. So now, if you take the Series 7, you can't do all the things that I can do
Right.
because they've broken out some of the licenses and made them separate licenses
Right.
to make the barrier of entry a little bit less.
Mm-hmm.
Um,
What are all those other ones? Because you had, you had, I don't know, Series
yeah,
23.
yeah,
Like,
yeah. So I'll go in
do you
numerical
know all
order.
the?
Yeah,
Do you remember all those? Like, can you
yeah,
off
yeah,
top of your head?
yeah, yeah, yeah.
What are run
I'm
down all
proficient
of
with my
those?
craft, so I'll go in numerical order. So
There's no judgment if you can't. I mean,
no, no,
we gain so much stuff.
no,
You know.
no, no. My license are important, and my license help my livelihood. So yes, and plus they help me build relationship, and I always got to articulate,
Right.
how I'm proficient to get relationship. So start with numerical order. So the Series 3 is an commodities license.
But before you even describe each one,
Mm-hmm.
like run down the
Run down the
list
list.
of
Okay,
all which.
okay. So you got the Series 3, you got the Series 4,
Okay.
you got the Series 7.
These are the ones you have.
Yeah, yeah.
Yeah.
I'm only talking about the ones I have.
Okay.
You got the Series 24. You got the Series 53.
I'm checking them all.
You have the Series 63. You have the Series 65 and the Series 99. And I actually forgot one, the Series 34. That was the one I
You did.
most
You got.
recently.
You did. You got it.
Yeah.
That was on your. That's on your bio.
Yeah.
That's dope.
Yeah.
But the 7 is on it. But why do people only know about the 7?
Because that's general securities.
Okay.
So that's the one that you can sell the most products.
Okay.
But ironically, nowadays most people try to get people to get the Series 6, which is a limited license. So
Okay.
you can only do like fixed income or like mutual funds. You can't actually sell individual stocks. You can't sell options
Okay.
because you're not proficient. And if you can't sell anything that you don't understand, and you have to not only understand it, but you have to understand if it's suitable for the person that you're selling it to.
Yeah.
So the Series 7 is the one that captures all, but unfortunately nowadays most people will get like the Series 6 because it's just an easier exam.
Yeah.
Again, the path of least resistance, and then they might pair that up with a insurance license.
What I'm thinking from when you started, 1995. That's like, I don't know, 25 plus years ago. How is it different? I mean, because now we have all of these. We have these applications.
Mm-hmm.
We have the internet.
Mm-hmm.
We did we have internet in 95?
No.
We had something of an internet.
Yeah, but it wasn't
as
wasn't broadly
expanded.
used.
It wasn't ubiquitous like it is now.
No, not at all.
Right. So we didn't have all the use cases, and so now a lot of people can buy stocks without a broker. How is that affecting what's going on now? Like,
So
if somebody wanted to be a broker, what's why would they be a broker now? Can they still make money?
Yes.
Knowing that now we've kind of been able, because of the internet, because of all these software applications, we can cut out the middleman.
Yep.
So is there still money to be made
Yeah.
from a broker?
Absolutely.
So how did that affect
Absolutely.
everything?
So I would say the shift went from when I started. First of all, I remember when Bill Gates said that the internet wasn't anything of significance.
Mm-hmm.
He quickly corrected himself on that and adapt accordingly.
Yeah, you got to admit when you're wrong.
Yeah. But so when I came in the industry, we were the gatekeepers of information, right? And now that's not so the
Brokers.
case. Yeah. Now because of the internet, we might have access to things, at worst maybe 15 minutes before people,
Right.
at best at the same
Right.
exact time. But just because you have the information doesn't necessarily mean that you're competent.
Right.
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 And so for brokers, And for investors in particular, it's about opportunity cost.
Mm.
I tell people now that, even ask me to invest, I was like, you can do this on your own.
Mm-hmm.
I said, and I actually encouraged them to. It's just the opportunity cost. And opportunity cost is you to learn, study, figure it out, make some mistakes,
Mm-hmm.
and then get comfortable with investing according to your risk tolerance and your time horizon. Some people don't have the time to do that. Like example, a lot of medical professionals, they know their lane.
Right.
Their lane is intense. They really don't have room or capacity or the aptitude to put anything in that box. And so that's when a financial professional is that added value. You're seasoned, you're professional, you guide me through this, and I'll compensate you for that.
Right.
But it's an opportunity cost trade-off.
Yeah. I think a lot of people's attitude is the culture attitude is we can do it ourselves. We don't need a professional.
Yeah, but I think that's actually a good thing.
It is.
I think it's a good thing, and I'll tell you why. Because when when I got in the industry, and it's still like that. It's still really a white male dominated industry,
Mm-hmm.
And me and the gentleman that brought me in, we were really the chocolate chips and the cookie.
Mm-hmm.
But even when I went back to our community and talked about it, it really wasn't something that we had a dialogue on. Like
Yeah.
even when I told people, like, what you're doing, what?
Yeah.
But now, because we're in the information age, and you can choose information for whatever you want. You can choose it for, beneficial reason, or you
Yeah.
can choose it for nefarious reason. But there's a lot of people that look like me and you that are diving in and figuring out how to navigate the system and how to create wealth. And we're having conversations that when I got in the industry, nobody was talking about wealth.
Yeah.
Now people are talking about it a lot. And even if they make
Finally.
mistakes, I mean, it's Pandora's box is open.
It's always good, I think. It's never a loss, in my opinion, to take advice from somebody who's been through the path,
I agree.
who's learned, for instance, in this, who's learned from the curriculum, because curriculums are built.
Yeah.
Somebody figures out the proper sequence.
Yeah.
At least whatever was the most proper sequence at the time.
Yeah.
And while you're new to it and you're just picking out and learning what you want to learn, you could also be getting guidance from somebody like you,
Yeah.
who has been through the levels.
Yeah.
You know what I mean?
Yeah.
And then you could still be out there on the internet, taking shots and taking chances.
Yep. Yeah.
So ultimately you got to these new firms, something you developed with a partner in 2006.
Yeah. Yeah. So, I was on my own financial professional, had my own book of business for years, went through market cycles of bubbles and busts. And then finally, with my partner, we decided to start our own broker dealer. And we started that in December of 2006. And by that time, I had been, so one of the licenses is Series 24. So that's a principal license.
Mm.
So that means you basically supervise everything.
Okay.
It's a general securities principle. And so I had been a principal for firms. So I had managed people, I had trained people. He did as well. He was extremely successful. And we just had an aha moment like, this is not rocket science. We could do it ourselves.
Mm-hmm.
And, he had the capital and I had the competency. And, we built something I think was pretty amazing.
Mm.
We started with a 3-man shop. And, we had probably like maybe 10 million under management. Our office was probably no bigger than this space here. And we grew it to its peak where we managed about 2.5 billion and had about 200 representatives working for us. One of the largest Black-owned financial institutions in the country.
Wow. And but that was based here.
Yeah.
In Atlanta. Nice.
Yep. So it was just an amazing journey.
And then somehow you get to IBIS.
Yeah. So during that time,
That's where you are now.
yeah,
IBIS.
yeah. So I've always done IBIS because I'm a fan of multiple revenues. So even when I was growing my firm, IBIS is my compliance and financial service consulting. So in our industry, it's very consultant friendly. So people that have the appropriate licenses or have worked for the regulators, whether it was FINRA or the SEC, they'll consult with firms, just to help them navigate their business.
Mm-hmm.
And so I've always done that on the side. So even when
Okay.
I was growing a broker dealer, I've consulted or I've interned at or been an interim like chief compliance officer, chief operation officer, or some of my licenses, like my Series 24 is an option principal. So in order for a firm to be able to offer options to the public, you have to have somebody that's able to supervise it. In
Mm.
order to supervise it, you have to pass the proficiency exam, which is the Series 4, which is
Okay.
an options principle.
Okay.
So once you have an options principle, then your firm can do that business. So
So you're consulting businesses,
yeah,
right? That corporations that want to make investments outside of whatever their business services they want
I
to.
consult for broker dealers. So I grew a
Okay.
broker dealer, but I also consult for other broker
Okay. Other
dealers.
broker dealers.
Yeah,
Okay. Not for
yeah,
corporations per
yeah.
se.
Well, I mean, they're corporations or
Yeah.
they're
Right.
LLCs,
Right. But
but
corporations that are in the business that you're in.
they're in
That's
the
what it's
business
for.
that I am.
Okay.
Correct.
All right.
Yeah. There's certain lines of business that you need. And so my business model was when I first got in the industry, I'm a wealth manager, I'm a broker. So
Mm-hmm.
I would manage your money.
Mm-hmm.
And then I would manage multiple people. And that's my book of business. Right. And I work under a firm, and the firm, that structure, um, supervises the brokers, and they basically create that ecosystem for brokers to actually work. For that, they get a percentage of whatever commissions you generate.
Okay.
And so I went from working for a broker dealer to having my own broker dealer,
Right.
and I create that ecosystem for brokers. They're usually brokers that are already been in the business some time, and so they have their own book of business, and so they will come under my umbrella.
Okay.
But in order to do that, brokers are not only going to do stocks and bonds, um, they're also going to sell life and health and variable annuity. So your firm has to have that under its umbrella in order for them to be able to offer it. So I got the license for that. And then even in the wealth management world, there's two lanes. You can be a stockbroker, or you can be, well, it's really called a registered investment. I mean, a registered rep. On the street, we might call it stockbroker, but it's really a registered rep, which is a Series 7 license. But then there's a financial advisor,
Okay.
RIA, registered investment advisor, and that's a Series 65. Very similar, but different in the sense that a stockbroker, they charge you commission, so it's more transactional. So if you buy something, sell something, I charge you commission, and then that's it. Whereas a financial advisor, I charge a percentage of the assets under management. So if I manage 100,000 of your money, I might charge you 2%. So I make 2,000 off that over the year.
Okay. So
But
that's what's going to ask is to how long, over what time is that percentage charge? So it's over the year.
so it's an annual rate.
Okay.
It's an annual rate. So what it does is,
And how much time are you're just available all the time for, shoot you email?
yeah. So it really, your engagement depends on what the client is looking for. I mean, some financial advisors are like, clients, best men, right?
Mm-hmm.
Some of them are a little bit different. They're a little distant. So, but at minimum, in my opinion, there's no rule book for this, but at minimum, you should at least have like a quarterly check in,
Mm-hmm.
because there's two pros and cons to both models, right? The con to the registered rep slash stockbroker model is that your interest as the client and the broker's interest conflict, because he needs you to do transactions in order to make money,
Mm-hmm.
right? And so sometimes if he's in a bad space, or if he's a bad human being, he
Right.
might get you to do a transaction that's not in your best interest to affect his economics, right? And so on the RIA side, it's perceived as less of a conflict of interest, because when your assets grow, my income grows because I get a percentage of your assets. So in theory, we're on the same side of the table.
Right. It,
But
it benefits you to help them do well.
absolutely. But in times, there's always a catch-22 for anything. So on the stockbroker side, they call it churning, when it's just trading for no reason just to generate fees, right? On the RSA side, they have something called reverse churning. So reverse churning is, I get a percentage of your assets, but like you asked earlier, what do you do for it?
Mm-hmm.
You could have a RIA that does nothing, right? And they just eat on it. They just eat. And they might be good. They might have you in some mutual funds that just keep you on life support. So maybe it does 4% and they take 2%.
Right.
And so they're on life support, and so there's checks and balances to look for both, because again, the SEC and FINRA, their job is to make sure you protect the public. And so that's why you have to have those principles in place, because those principles are supposed to be making sure that everybody's protecting the public and
Right.
doing what's right.
So getting back to the life insurance and life and health insurance. So was it something you were actively selling, or just something you had to have
Yeah,
a
so
license you had to have in order to serve these businesses?
yeah, so I didn't act. I would stumble into business just because I had the license. I understood the product. So friends and
Mm-hmm.
family would be like, "Hey, can you tell me about this?" I like, or they would like, they might be looking to do term life, and I'm like, "Well, term life is good. I understand your thoughts because it's a lower premium you have to pay,
Mm-hmm.
but there's no cash value. You might want to do whole life." And then we'll have those dialogues, and I'm like, "All right, well, I'll do what you, Jay. I was thinking about it." So
Okay.
I really never actively pursued it. It was more so for me to have it all that I needed in my ecosystem to facilitate the brokers, and also to understand how to make sure that they're not doing anything that's detrimental.
So now you are IBIS and
IBIS compliance and financial
IBIS
services.
compliance and financial
Mm-hmm.
services. So having been all these years, why would anybody choose that? I mean, like, if somebody's trying to think, what would I want to go into? What would be the benefits of being in the financial services? If someone wanted your advice, and then what would they need to do?
Yeah.
What kind of things do they need to look out for?
So the bottom line is actually, you're helping people achieve their goals. Like, who doesn't want to do that? Right?
Yeah, true.
Right? Like, it's literally that.
Yeah.
Now, again, the details in the weeds is a little bit more than that, but ultimately that's it. Like, literally, because I'm in this industry, people come to me a lot. "Oh, Jay, what should I invest in?" Like, it's not that simple. It's like, what are you looking to accomplish?
Right.
What is your investment objective? What is your risk tolerance?
Right.
Are you somebody like, let's put it all on black?
Right.
Or are you like, no, I need my capital preserved, but I want some type of growth, right?
You're saying that you also consult
Yeah.
individuals,
Yeah.
not just
Yeah.
corporations.
Yeah. Absolutely. Absolutely.
Okay.
Yeah.
So it's lucrative though.
Yeah. Definitely.
Yeah.
Definitely. But again, the business, between helping people achieve their goal, we're also in the industry of risk versus reward. And that's for individuals, but that's the business as well.
Yeah.
Right. The business is very, you could get sued very often.
Yeah.
And in our industry, you're guilty until proven innocent.
Yeah.
Right. You have to go through arbitration. So you could say, I lost you 100,000,
Yeah.
and you never had 100,000 with me, and we got to go through that process.
Right.
And there's lawyer fees,
And that's costly.
Yeah.
Yeah.
But again, when you talk about risk versus reward, you can make a really decent living doing it, and um, and you can develop really good, rich relationships. And so not only do you develop rich relationships with your clients, but you can see the positive impact that you have on them and their family. Like, if it's done correctly, again, we talked about, generating wealth, but you're literally generating wealth. And if you structure right, you can have somebody's family good. They could be a trust baby.
Yeah.
Right. And then that's part of your legacy. You can look back and be like, wow, I was a part of that. So it's very rewarding, but the market is volatile. So you're not going to be right every time. And you really, as a financial advisor, you really earn your value and your stripes when the market is down, but you believe in where you're positioned, and you have to talk to your client, be like, hey, we're down.
Right.
But
how it turns out after that down cycle.
Absolutely.
Yeah.
And not everybody has a constitution to do that.
Right.
Like not every people will call you all the time. Hey, I made you this. You're
Yeah.
up here,
Yeah.
right? You didn't earn
Yeah.
your worth in that.
Yeah.
It's like life. Like your friends, you know who your friends are through who was with you when you went through the tough times.
A lot of people found that out through COVID.
Yep.
Right.
Yep.
And I remember when you talk about having, the stomach to go through like a down cycle or whatever, I purchased through you,
Mhm.
QQQ.
Yep.
Back in, I think it was 2000. I was trying to get into investing.
Yep.
Yeah, I graduated Hampton in 2000, and I bought 11 shares. I remember this like yesterday. Bought 11 shares, came just under $500.
Right.
I wanted to get started, right? So this is 2000. 2001 was like crash time.
Yep.
The world went crazy.
Yep.
And I kicked myself to this day. I bought it at, I remember this, $43 a share. 43, 44, something like that. And somewhere along the way, I quit my job. Or, yeah, I did quit my job. I actually didn't get laid off.
Yeah.
I was still good, but I quit my job. I was tired of being in the West Coast or whatever. And I was on my mission. I was taking chances, sleeping in my car, whatever.
Yeah.
Times got tight.
Yeah.
I still had like a girlfriend back in Arizona. And I just needed to find money from somewhere. And I
You're like QQQ.
I called you up, cashed it out.
QQQ.
Yeah. I cashed it out. And I mean, what is the price now of QQQ? It's way more than $43.
Yeah.
I know that. Even if it's down now relative to 2 years ago or 5 years ago,
It's still up from
it's still way up from where I had at 43. And you didn't just say, okay.
Yeah.
You was like, are you sure?
Yeah.
Is there anything else,
Yeah. But that's a good lesson because even though that's not an individual stock, it navigates very similar to an individual stock. And what people understand is, again, when you talk risk versus reward, so people just think, oh, I'm going to get in, I'm going to get a stock and I'm going to flip it. And there's a mindset for that. But really, when you invest in a stock, your mindset should be like a 10-year horizon because individual stocks are the most volatile form of investing. And if your time horizon is short, when you need it, it might be in a down cycle. But over the long run, if you look at a 10-year history and you compare it to any other investments, it outperforms.
Right.
You just have to be able to weather the cycles.
Right.
And also you have to fight your intuition. Right. So when the market is down and things are down, people get in that psyche and they sell.
Yeah.
Right.
Yeah. Yeah.
And then when the market is up, they get in euphoria and they buy. So
why is that such a backwards way of thinking?
You're selling low and you're buying high when
you're losing money.
What you're supposed to do is buy low and sell high.
Yeah. It's an emotion. It's a panic move.
Yeah.
It's a panic move.
Absolutely.
Basically what I was doing.
Yeah.
And for me, no, it wasn't really about seeing myself lose money in the market.
Yeah.
It was more like, oh my goodness, I need money.
Yeah.
I'm so broke. I need $500.
Yeah. And you would think people would mimic the more successful people.
Right.
But we're still humans.
Right.
It's funny because obviously another mutual friend that we recently saw, Craig Nibbs, aka Moses.
Yeah.
I talk about stuff like this with him because of his psychology background.
Yeah.
Because the market is a real life testing ground for human psychology.
Right.
And even pack mentality.
Yeah.
So it's really interesting. So again, that's why I kind of love my profession because it exposes me to so much, not just macro psychology, but macroeconomics. And then when you're looking at individual companies, microeconomics. And then different companies do different things. So it gives you exposure of just what's going on in the world.
Right.
So it's been fun, challenging, but fun.
Yeah. But is there a difference in what you do and what's called a fiduciary?
Yeah.
So from my understanding, fiduciary has certain responsibilities, kind of to do the right thing, for lack of a better way of saying it.
Yeah. So it's good you asked that.
What's the difference?
A registered investment advisor has a fiduciary duty to its clients.
Okay.
Recently, FINRA has amended their rules where a registered representative has to do what's called the best interest to the client. Very similar to fiduciary. They wanted to get up close to the standard of fiduciary, but they didn't want to do the same thing because then what's the sense of having one and the other?
Yeah.
So a fiduciary literally, it's a higher standard. Like everybody has the responsibility of doing what is in the best interest of the client, even if it's at a detriment to the financial advisor.
Right.
It's you have a high standard to make sure you separate your economics
You're
from
gaining
them. Yes.
a higher ethical standard.
Yes, it's a higher ethical standards. Prior to, I think the best interest came into play in 2000, and it might have been 2020, like in June 2020, where FINRA raised this standard just because so many people put pressure on them that their standard should be similar. They wanted them to have a fiduciary duty,
Mhm.
but there was risk and pitfalls with that, so they created a best interest. But ultimately, that's the goal: is to make sure that financial advisors or registered reps are aware that they always have to put the client first.
Right.
And you think that, duh,
Right.
but it's not always that,
No.
and
Because greed, I mean, you're dealing with money.
yeah. Well, I mean, you're dealing with capitalism. Like I tell people all the time, I work in the pinnacle of capitalism,
Yeah.
and you know, they talk when you hear people get accolades in my industry, it's he's a killer, he's a beast, he's a whale, he's a shark, right? Those aren't humane terms.
They're not.
You
I
know?
have called a real estate an agent shark.
Yeah, yeah,
She got mad, but it is what it is.
yeah, yeah,
You know you are.
yeah. So and again, like life, you have good and bad. But the regulatory authorities try to best to make it challenging for the bad to be in the industry. Put it to you this way: if you're a registered investment advisor, you have a fiduciary duty to your
Okay.
clients. If you're a registered rep, you have best interest, which didn't exist until the summer of 2020. Prior to that, it didn't exist. There was rules and regulations that say you're supposed to put the client first, but they codified to make the standards higher so that it's close to the fiduciary. It's not identical, but it's very close. So if you're a registered investment advisor, meaning if you charge a fee, if you charge a percentage, you have a fiduciary duty to your clients. If you're a broker dealer and you charge commission, you have the best interest. Now the challenge is a lot of people in the industry are licensed and registered investment advisor, registered rep, and insurance, right? And those are three separate entities or three separate regulatory bodies. They have very similar rules and regulations in the same wavelength, but not identical.
Right.
And so, it just depends on the relationship that you have with your broker will be what standard they're held to. There's something that every client is supposed to receive at or before they establish the relationship, telling them what capacity you're in, what the inherent conflicts of interest are, and then what limitations you might have. So, like when I told you some people go for the low hanging fruit and are Series 6.
Mm-hmm.
So, you don't know the difference between a Series 6 and a Series 7 as a general person. So, you think they can do everything for you, but they can't sell you individual stocks, they can't sell you options, right? That might not be in your best interest. And if
Right.
you're not aware of that, then you think that they're giving you all the products that you need,
Right.
not knowing that they're in a box and they can't go outside. They're going to
Right.
give you the best that they can give you.
Right.
That wasn't transparent before.
Right.
You know,
So you don't know what you don't know.
right. And so now they're trying to make it more transparent that you have to give it to them before or right upon establishing the relationship so that you know, oh, okay, you're limited in doing this. Then you can make an intelligent decision. Okay, I'm aware of this. Let's still move forward.
Right.
Or, okay, I'm aware of this. I'll only use you for this.
Right.
Or, oh, I'm aware of this. You don't fit my needs.
All your years experience. It's 2023.
Mm-hmm.
Day one. Day one, 2023.
Mm-hmm.
We're in the world of uncertainty
Mhm.
given the market. We've got war in Ukraine.
Mm-hmm.
We've got China is sort of getting out of the zero COVID thing,
Mm-hmm.
but we've got the tech war between China and the US.
Mm-hmm.
You know, we're limiting the technology. Um, there's a lot going on. The housing market seems to be having a correction.
Mm-hmm.
I'd say it's not fast enough,
Right.
but
Right. Depending
uh,
on what side of the fence you're
depending
on.
on what side of the fence you're on. What would you think people's approach should be? How should they look at it? I mean, we're looking at just uncertainty. Some people are saying we're going to hit a recession.
Yeah.
A lot of people are saying it's not. I mean, the job market is still very strong.
Yeah.
It's
Yeah.
hard to tell.
Yeah.
It's really hard to tell.
Yeah.
How would you think somebody should approach this year?
Yeah. So anytime I talk publicly, I have to give a disclaimer,
Of
right?
course.
So one,
And I've kind of preambled your
yeah,
disclaimer.
yeah. So I'm not allowed to talk about individual stocks because I'm not a research analyst, right? And also, in my field, it could be considered very manipulative, right? Especially say I own something, I'm like, hey, you guys need to buy
Right.
that. Then you buy it out. It's called front running.
Right. You need to at least
So-
disclose.
Right. So I always got to talk like 30,000 foot, which is really what you're asking.
Yes.
But I just want to say that. So I would tell you that I don't have a clear picture. I think it's a very interesting time. I think there's opportunities, but I'll kind of run through my mindset of what I'm looking at to try to figure it out because I can't say I figured it out. I nibble at the market as it's gone down.
Mm-hmm.
Again, what you said about um, the war, right? So that's disruption, right? That's having a huge impact on
Energy.
Europe on energy, right? Like this is the first time that the pound sterling, I think it's on par. It might actually be below the dollar right now, and I think the euro is below the dollar. You don't realize that Russia and Ukraine, provided so much wheat and grain until now there's a disruption, right? So countries are actually
I never
at,
knew.
yeah. So now countries are looking at like, how are we going to eat, then what's going on with the US and China, right? It's chaotic right now, more so than I've seen at any other time. And I think that there's opportunities here. There's inefficiencies. And so if you can just see an opportunity and weather the storm, because
Yeah.
you might see the opportunity and you might purchase it now or sell because you can make money selling, right? But just taking advantage of these opportunities and weathering the storm, I think that we're in a place where wealth is going to be generated. In times like this, traditionally, you just have a flight to precious metals, right? You just gold, silver. But now you have this crypto world, right? That especially Bitcoin in particular
Yeah.
is an asset that does what gold was doing,
Supposed to
but
do. Yeah.
but allegedly more efficiently,
Mhm,
right?
mhm.
And so you don't know if people are going to be conventional and just fly to precious metal, or are they going to do this new medium of exchange? And do you wait and watch? Do you see the US just box
Yeah.
out and none of that happens?
Yeah.
Or do you nibble out a little bit?
Yeah.
So for me, that's what I'm just trying to navigate is just figure out, all right, where do you nibble at?
Yeah.
Where's the opportunity to generate wealth? Where's the opportunity, to what everybody should think about is how do you make your money work for you? Because there's only two ways to make money: passive income and active income.
Mm-hmm.
Active income is what we all usually do. Our normal vocation, you literally are engaged in it.
Yeah.
But when you invest, you're putting your money to work for you. And
Yeah.
you just want to deploy that capital so that you can get the best bang for your buck.
Yeah.
But I think it's an exciting time. It's a scary time, but it's an exciting time.
It is. I think anybody who claims to know what's happening, what it's going to be,
Yeah.
it's probably somebody you should steer clear of
Yeah.
because there's too many factors.
Yeah. There's too many variables.
But in any market, any climate, any economic climate, there are opportunities.
Yeah.
You kind of, I think you have to, you got to weigh your risks.
Yeah.
Yeah. I think, if you're still working, there's money to be made because the job market is really strong. Salaries are up.
Yep.
And what you do with that increased salary is up to you.
Yep. And you
So-
also got to think about the fact that the job market is so strong because there's a lot of people that have checked out, right? And again, it's simple as economics. It's just scarcity.
Yeah.
You know, you have a limited workforce,
Yeah.
and you have all these jobs or tasks that need to be done.
Yeah.
Um,
I see that, you know, because I'm still in the
yeah.
workforce, and I think possibly, you know, we a lot of people died,
Mm-hmm. Yep.
and I think that's part of the loss of workforce.
Yep.
Then you have the mood change during the market, in my opinion, about, you know, among workers.
Yeah.
A lot of workers have said, particularly I think, you know, people that look like us
Right.
have said, we're not doing this anymore.
Yeah.
Like, we're not engaging in doing work to build your empire
Yeah.
anymore. So
Yeah.
there's a lot of people that are on that, and they're empowered, I guess, you know, in their mind by the removal of the middleman using social media.
Yeah.
So there's a lot of self-employment, and people are making it happen. There's a lot of reinforcement of small businesses by people within our community supporting each other. There's been a lot more, you know, kind of black support black business
Yeah.
going on.
I agree.
But also, I think, and I'm not being an advisor, I'm just going by, you know, what I'm seeing on the streets, what I'm hearing on the streets, and what I'm seeing. But if you think about just the dynamics, if people are opening businesses, that means they need employees.
Yes.
So you got people quitting the market to go open a business.
Yeah.
But now you've changed from an employee to an employer, so you need somebody to replace who you are.
Yeah.
You know, it's like a chemical reaction.
Yeah.
You know, you got holes and you got you know, you got electrons.
Yeah.
You know, and somebody when one moves, the other, you know, is created.
Yeah. It's cause and effect.
Yeah. So I think that's also increasing the challenge. You have more people are saying, I'm going into business. I'm going to get my LLC. And then, you know, some of those businesses are really thriving and they need help.
Yeah.
You know, so, and now you're competing with the existing corporations that always existed.
Yep.
Yeah.
Yep.
So it's an incredible dynamic right now. I don't think anybody can say what exactly is going to happen.
There's another layer to that too. It's a huge layer. Technology is coming. That's you checked out. That's fine.
Yeah.
You're gonna be replaced by either AI
Yeah.
or a robot.
Yeah.
Right.
Yeah.
And if you're not forward thinking to see where the future's going,
Right.
and you don't adapt your skill sets,
Right.
I don't care if you're an entrepreneur or an employee.
Right.
If you don't adapt your skill set, you'll be obsolete.
Right.
And so again, where we have this opportunity where a lot of wealth can be generated,
Right.
there's going to be an increased disparity in wealth as well.
Absolutely. It always has. It always, the disparity always increases no matter how much I think, you know, no matter how much the government tries to close the gap, simply because of the way tax structure is set up, and the way people they so much want to fight the tax structure instead of changing the way you spend your money to benefit from the tax structure. Right. And then those who do go with the tax structure, how it's, you know, exists, they continue to benefit massively.
Yeah.
And the way, you know, one group spends their money as opposed to the other, you know, you really have to use your energy. Like you said, active income. Active means energy, you know?
Yeah.
Passive
literally
means none, basically.
Literally.
So, you know, and energy is finite.
Yeah.
So you burn out. You burn out eventually. Even if you don't burn out, you're still limited, you know? Where can people get in touch with you if they needed to get any of your services?
So good question. So I've been blessed where I'm really not held out to the public.
Okay.
You know, I don't have a website. Most of my relationships is through word of mouth, but they can email me at jtsadler@ibis360.com. And just my little tidbit on it. I named my company Ibis because it's a African bird of wisdom. So, you know, you have the Egyptian god, Thoth, Tahiti, you know, or Hermes, however you want to call it. But that's the Egyptian god of wisdom.
Nice.
And so I wanted, as I build, I wanted something that meant something to me. Where not everybody understood it. It still was precious to me.
Nice.
It's IBIS Compliance Financial Service, but they can reach me at JT Sadler at IBIS360.com. There's an acronym in it for me as well. Intelligent buyer, intelligent seller, intelligent brother, intelligent sister.
Nice.
So
Glad to have you, JT.
my pleasure, brother.
Thank you.